when they could have easily bought a house with down payment assistance or any myriad of the 3% down payment programs that are out there, but they insisted on waiting. This is something that most lenders don't tell you at the time of purchase. Now, there are other down payment assistance programs out there that will actually, if you were to get a down payment assistance program with free money or a 5% gift, has a higher interest rate, which in this video, I'm going to talk about the pros and the cons of down payment assistance programs. Now, if you're watching this video and maybe you're a first-time buyer or you know someone that will be, and you want to know, how do I take advantage of a state or a federal down payment assistance program, because they do exist? What are the pros and the cons, and how would I qualify for those types of loans? This is exactly what I'm going to cover on this video. But before I get into it, if you're watching this video for the first time, please make sure to like, subscribe, or hit that bell button for me so that more people can get exposed to the types of videos we're putting out on creative finance and how to build wealth through real estate. My name is Team Lamm, and I've been a mortgage lender for 22 years in Northern California. I started in this business because I needed a job, and it's become my purpose. And now I have thousands of clients all around the nation, and many of them have become my closest friends, and I love what I do. So let's talk about down payment assistance programs. One of the biggest hurdles for someone buying a house today is, I don't have a down payment. And, a lot of people will stay away from buying a house because they don't think they qualify, or maybe they've heard some financial influencers like Dave Ramsey who had said, you shouldn't buy a house until you have 20% down. And as much as I love Dave Ramsey, I'm just going to tell you a story about why you might want to rethink that idea. I had clients back maybe 4 or 5 years ago who wanted to wait until they had 20% down when they could have easily bought a house with down payment assistance or any myriad of the 3% down payment programs that are out there, but they insisted on waiting until they had 20% down. Well, then they come to the market this year to buy a property. Not only is their interest rate now higher, but home prices are 35% higher in most areas than they were just 4 years ago. So it's really obvious that if you think about that principle, time is money when it comes to assets, because assets generally go up in value and appreciate. So in 22 years of specifically helping first-time buyers, move-up buyers, in all the states I'm licensed in, I will tell you that if you can afford it and the timing is right, but you don't have a down payment, you should really consider a low to no down payment product. When it comes to down payment assistance, there are a few different types of products that you're going to be looking at. Now, most states offer down payment assistance programs that are funded by bonds or special allocated funds from that state for people to achieve the dream of home ownership. In states like California, we have something like California Financial Assistance Program, whereas in the state of Oregon, Washington, or Idaho, they have a different name, but if you look at the guidelines, it's very similar. Now, the thing that a lot of people don't know about these sorts of products is the down payment assistance portion is usually somewhere between 1 to 5% that can go towards the down payment or the closing costs when you buy a house. Now, this was not free money. You do have to pay it back if you were to refinance that program, or if you were to sell the house and the loan gets paid off. Most of these down payment assistance portions of whether it's 1 or 5%, it's going to have an interest rate associated with it, but they're generally pretty low. Now, when that loan gets paid off, you're going to pay off the mortgage, you're going to pay off the down payment assistance portion plus interest, and this can affect the amount of money you're going to get when you go to sell that property. The other thing you're going to want to consider if you use a down payment assistance program like the California Financial Assistance Program is going into a refinance. Now, right now, interest rates are higher, and most people that are buying a property are going to get a chance to refinance into a lower interest rate, which will lower that monthly payment. But the challenge that can come up with many of these programs is when you go to do the refinance, you're also going to have to pay off that down payment assistance that you got when you bought the property. Now, if you're doing a government loan like an FHA loan, this can be a problem because most FHA loans have a specialized refinance program called an FHA Streamline Refinance that doesn't require an appraisal, and most of the time you don't have to prove your income, and it's really quick and easy to get done. But if you have a second on your house that has to be paid back to some state organization, you will not be able to do a refinance without doing an appraisal, which means you're going to have to do a full refinance, prove that your home is worth a little bit more than you paid for it, finance and closing costs, prove all your income documentation. And this is something that most lenders don't tell you at the time of purchase. Now, there are other down payment assistance programs out there that will actually give you free money that you don't have to pay back. And those in many cases will be more attractive to a home buyer. There's a program out there like the GSFA in California and many others like it throughout the nation. One product we offer in-house where you can get up to 5% towards that down payment for most loan programs out there, such as a conventional loan or an FHA loan, and it doesn't have to be paid back. It is treated as a true gift. Now, most people, when comparing these two programs, one that has to be paid back, one that doesn't, would say that seems like a pretty easy decision. But here's the catch. The down payment assistance programs with most states have a lower interest rate, whereas in some cases, if you were to get a down payment assistance program with free money or a 5% gift, has a higher interest rate, which is going to make your payment higher. But if you're buying in a year like 2024, where a refinance is inevitable, if you can afford it, it does make sense in many cases to go with the higher rate and the gift so that when you get the chance to refinance, you don't have anything holding you back from lowering that monthly payment. Now, I want to talk briefly about the qualifications for most of these programs. So for many of these programs, you can get into them with a credit score as low as 600. Now, some of them have a higher credit score requirement, but most of them will get you in at 640, while some of them you can have even a lower credit score. The first-time buyer requirement is going to vary from state to state and program to program. There are ways to get around the first-time home buyer requirement for many of these programs. Some of them are going to want to know that you truly have not owned a home and neither has your spouse. But there are some programs that if you've been a first responder or either you or your spouse have not owned a home before, and several other variables where you still might be able to take advantage of these programs even if you or your partner has owned a property before. So I wouldn't worry too much about that. The biggest qualifier for most of these programs is going to come down to your income. Now, many of these programs will have what's called a maximum debt to income ratio, meaning they want to make sure that you can easily pay for the payment and cover any of your other expenses like your car payment, credit card bills, student loans at the same time without putting you at risk. Now, this makes common sense if you think about it. If you're not putting money down, it's going to be a little bit more of a risky loan to the bank, so they want to make sure that they're not putting you in a position to lose. However, there are some programs that will have a higher debt to income maximum where people that have car payments and things like that can still qualify and take advantage of down payment assistance. So if you're worried about your income, I wouldn't be too concerned. Now, to figure out if you can qualify for something like the state program or one of the federal programs, is actually pretty simple. You're just going to simply talk to an approved mortgage lender, and they don't even have to do a hard credit run. And usually in about a 30-minute consultation, you can understand what you can qualify for, what your purchase power is, or the type of property you'd be looking at, what the things like monthly payment, cash to closes, the things you're really going to want to know if you're considering buying a property. And I am a mortgage lender in most states, so you're always able to email me directly. I'll put my email in the description below if you have any questions about this program or anything else. If this video was helpful for you and you learned something, please like, subscribe, or leave a comment below and ask any question. I do get back to them, and I really appreciate you for checking out this video.